What's up, guys? I literally just jumped out of the shower. This is me, fresh-faced and wet hair, but I want to talk to you about Bitcoin. I've got my whole setup over there. We're going to take a look at the charts. Before we do, I am now settled in Dubai, so let me show you the beautiful day that we are having here. Check out this room with a view. We've got the beautiful Dubai Eye there and blue water. We've got boats out on the water. That is pool down there. Lots of people on the beach today. We've got the palm right ahead there. Stunning start to the day. All right, let's get into these charts. I've got a lot of writing all over my screen right now. It's something that I put in the community earlier today or potentially yesterday, depending on what time zone you're in. And so I want to talk to you guys about what I have marked here, because we had a different kind of weekend trap this week, and it did give us a hint as to this potential breakout that ended up actually happening. And I need to take you back to Friday last week for that reason. Now, if you've been watching this channel for a while, you will know that the week usually closes out with a Friday trap move, and that happens during the UK session. Now, last week, I actually think we were live on YouTube for UK, I can't remember, but last week we didn't get it in UK, which is why I kind of issued a bit of a warning to the US potentially doing something unpredictable. And that is because in UK it will usually open with a false move, then runs a trend against the move, and then it repeats the initial move at the end of the session. And we didn't get that in UK on Friday. We just got a straight uptrend for that session. So that's what made me cautious about the US session. Now, we also had buy orders. I'm just trying to remember the price now. I think it was down at it was 25,500. So I was kind of expecting another push to the downside to get to the 25.5. We didn't quite get all the way to 25.5, but we did get to 25.8, and we did have that next move down in the US, which, by the way, I find it quite funny that we can be off our target by $300 on this channel and it's considered not calling it, but every other channel they can be $3,000 off and they called it. Gotta love the crypto bros. But anyway, I would find a $300 difference fairly accurate in my opinion. But the reason that we didn't actually continue down is because as we were looking at heat maps during the live call, once that ended, more orders did come in above that initial 25.5. So that's why we ended up getting this bounce. And it wasn't based off a news event. The news had already happened in UK, which was why we didn't get the weekend trap happen in UK. Also added to my suspicion that we were going to get the trap in US instead, which is what happened. Now, as you can see, if you have a look at these levels, all these little blue lines that I mark on my chart, these are liquidation levels where look, there's liquidations at all price levels, but these are high amounts of liquidations that we look out for, that we expect to be a target when the market maker does reverse the price. So once we had this push down and we had a push straight back up out of it, that is a V-shaped recovery there in my opinion. Some people will call it this a final damage W. Not incorrect. It would be if you are able to count your three levels from going back. So this is drop level 1, retracement. You may have counted this all as 2 into a board meeting. You may have counted this as 3, and then that's a final damage, which usually happens with an extension. And the reason that we call it final damage, it's not technically called that, by the way. If you are new here, I also make up a lot of my own terms, so they are not Googleable, but we do teach all of this stuff if you're interested in learning more. There are links in the description of this video, but we call this a final damage W, and essentially what it is when the market maker hits the final level that they intend to be the final level for the last time, they then have to go into a board meeting or a retracement, and the point of that is for them to then take their time to assess the damage that they did in the prior move. And once they've assessed that damage that they've done in the prior move, they either go, okay, we collected enough contracts on that, we can reverse now, or we didn't, let's hit the stop losses of everybody who longed this bottom. That's why it's dangerous to long or short a first peak M or W formation, because you can't know in the first peak if the market maker actually accumulated all they need to. So this right here is where it's called a final damage, because that's literally what's happening. They hit the low, didn't collect everything that they need, but people did bottom pick, as you would call it, and go long here. They let them believe that they were right for a small period of time, and then bang, they hit the low lower than the previous low in order to take out the stop losses of everyone here and also cause future final damage. Then in the same time as doing that, because it breaks a support, late shorters short down here, because this was also a break of a head and shoulder neckline on a higher time frame, which broke at 26, 9, 10-ish kind of area. So this would be people thinking on a, say, a 4-hour time frame, oh, the neckline's broken, it's not going to give me a retracement, and they jump in thinking neckline broken, we're going to 12K, which is still a conversation, weirdly enough. So anyway, that's a conversation for another time because I'm trying to keep this video quick. But out of that, we have this fast move here, which, you know, once you understand the method well and you're pretty confident in your levels and recognizing final damages and whatnot, you can take a trade out of that. But of course, it's just not ideal to do it if you're still learning. Anyway, once that's done, look how they then came immediately for the liquidity that they had built above price. So we had a level, this 26.40 was taken on the way down, so that one doesn't count. But this one here was a new one at 26,697. And look how they shot price up right before the end of Friday close on US down here. They shot it up, they trapped retail, and then they finished for the weekend. Their final damage was done. They're off the books now. They're out at a strip club, and the damage has been done here. They've taken out that liquidation. They have built their positions ready for next week, whichever way they wanted to send the market. Then we get into the weekend, which we call the weekend trap zone, because price tends to go sideways and do nothing. It's low volume. They will issue stop hunts to the upside and to the downside. These are designed to get you to think something is about to happen, but generally nothing happens. The EMAs contract, everything just goes sideways. And I always encourage my community to draw literally a weekend box around the weekend price action from the end of US Friday to the dead gap zone that happens Sunday 5 p.m. New York, mostly at the candle closes. And then if you do it that way, you can then assess where are the wicks that are either side of those candle closes, because they give you a hint of who actually got trapped. And once you can identify who got trapped, you can then identify which way the market is likely to move when the market actually opens. And so we know that people got trapped here on Friday, right? We know that they were then stuck in consolidation the entire weekend, or there would be new shorts and longs opened here, because these little wicks here, what happens is if price goes sideways for a long period of time, retail traders draw this as resistance, and then they believe that if price goes sideways for a long time, the next move is going to be explosive and they don't want to miss out on it. So they put buy stops just above what they call resistance and hope that if price shoots out, it's going to trigger their buy stop and then they're in the trade to the upside. And they do the same to the downside as well. If they're feeling bearish, they will issue sell stops just below the support. And for the same thing, they think if price is going to break down really fast, they want to be part of it. They don't want to miss out. So they just keep their orders there. So what the market maker does is let price consolidate for a period of time. Then they issue that move to the upside. They trigger those orders. And then eventually, as you can see here, they come back and stop it out on the other side, because anyone who had a buy stop up here would likely have their stop loss or liquidation level, depending on the amount of leverage that they use, just below the support. So you can see here, this would have triggered the long position. This would have stopped out the long position, but at the same time, it then triggers the short orders for the people who thought it was going to break to the downside. They also have their stop loss just above the resistance of the weekend. And you can see here exactly the same story happens. Not only does this trigger longs, but it stops out shorts. And that is the typical play for the weekend and why you're better off doing other things on weekends than trying to be part of it. This here is an interesting fake move week beginning. So towards the start of the new week, which is 5 p.m. New York Sunday, we will issue usually a fake move, and that is designed to stop out everyone who traded during the weekend, open positions, or trigger those buy and sell stops, right? So they will assess what's on the board, where is everyone positioned, and then they'll just do a fast move in one direction. And this happened here, that usually happens Sunday night, or it would be Sunday afternoon in New York. So that's what happened here. Now, this one got me a little bit suspicious, because I know in this case, because we had the trap happen on Friday in US, which is not normal behavior, we have to look at who has remained trapped over the entire weekend, and it would be the people who shorted this break down here. If they didn't already get liquidated, 100x traders would have been liquidated, but everybody else would have been trapped for the entire weekend as price just went sideways. So this little move up here would have been the final damage, probably to the 50x, maybe the 25x, maybe not yet, but that would have been the final damage to them. And then we just came back into the range. So that right there is the fake move week beginning. Now, yes, at the same time that triggers longs, it's not a matter, I want to be clear, of that market maker always wins and retail always loses. That's not how it is, because otherwise you might as well just give up. But there are levels where people who learn to trade just normal technical analysis, traditional technical analysis, they win in levels. You know, they usually win at level 2 and they usually win at level 3. They don't often win at level 1. The problem is not so much whether they win or get the trade right. The problem is taking profits. So these people here, you know, if this triggered long orders and the stop loss was below the support, they would be fine today. They would still be in the trade, and that's okay. Market maker's not trying to get you now. They're going to get you when they finally issue the M formation if you don't close the trade. So we've had this retracement. We stayed within this range, and now we've moved up to the third level. Now, initially, what I was waiting for was to see if we broke this 800 EMA right here, because we had this unrecovered vector candle right here. Now, we did break it through our Asia session. Was it Asia? Yeah, just towards the end of Asia session, we got the Asia extension to the upside, and we not only broke that vector, but we've now come into this remaining one right here, and we have not yet closed above it. Now, this is where I would expect price to potentially pull back. There is still the chance that this is the fake one-day move to the upside, because it is Monday and it reverses. Now, if it's going to reverse, it will usually reverse at a session changeover. Now, because we're in UK already, as I film this, it's too late for that to happen over Asia to UK, because the M is not already formed, in my opinion. So we'll be looking for US changeover to see, I don't know why I have this here. We'll be looking for US changeover to see if we do get, it is possible that this is starting to create an M formation here. However, I don't like that there's not a stopping volume candle, so it doesn't really count to me just yet. What I am favoring a little bit more is a retracement now. It depends on how fast price starts to move now, but a retracement and then a final push up into this 28k region. That's what I want to happen, and the reason is because of the heat maps. Let's see if they're still there. Yeah, so we have here, we've got buy orders here. They're not great, they're not huge, but they're still there at 27,100, but we've got sell orders here at 28. So that leads me to believe it's still possible, because we've had this push to the upside, that we come back for a bit of a retracement somewhere between the high of the day and the 50% area of the Asia line, anywhere in between there, and then we push out to this 28k. That would give me the level 3, and that at that point I would reassess whether price looked like it was going to reverse from there, or the model starts to feed into a higher time frame. But that's probably a discussion for tomorrow's video anyway. It doesn't really matter for now. What matters for now is if you did happen to catch a long position, you now need to set your triggers of where to take profit on that potentially, because you have to be aware that Monday's not over and US may reverse this, or where to move your stop loss into profit and let this run up to the 28k region. Or if you're not in a trade at all, looking for short positions when you feel that this 3-level rise is kind of over. So for me personally, I'm staying long at this moment, and I am looking at this whole area here. So back to say 27.2 to 20, say about 27K. If we came anywhere in there for a retracement, that would be fine. Look, all of these are unrecovered vectors right now. So if it really wanted to get dramatic, it could come all the way down here before it did that. I just wouldn't expect that to happen in one day. So not favoring that. I'm favoring this level. I want to see what happens here. And if it does look like I'm starting to get hammers and, star formations and just anything that looks bullish, railroad tracks even around that kind of area, then that's going to give me the confidence to believe, okay, yeah, we're probably going to go up to that 28K region. Otherwise, if it just continues a slow bleed and there's just no candles that come in that look bullish at all, then I would say that this move to the upside for the day is over. So I'm not favoring that, but I am open to price action changing simply because US is so unpredictable. So definitely watch that session change over for that kind of behavior. This is going to be one, if I do get my wish, if the genie grants my wish, and we do get this move to, it doesn't even have to be a retracement, could even just be a board meeting. But if we do get that shift out to 28K, then I am going to be looking for signs for this to feed up. I'm not automatically going to short M formations there, I don't think, unless there was a very, very strong stopping volume candle. But I am feeling like this week may not run a two-way trend. So normally, if you're new to this channel, by the way, welcome. You've probably heard a lot of things that you've never heard before. Stick with us because it does make sense over time. A midweek reversal is what we usually expect. So we usually expect a 3-day trend one way and then a 3-day trend back the other way. We close out by Friday. Sometimes there will be a behavioral shift and that can extend over a couple of weeks. So I am waiting to see that if we actually get a one-way trend this week. The reason for that is because I don't find too many concerning news events this week, because usually a midweek reversal will happen on a news event, and I don't really have anything that is all that massively concerning. We do have unemployment claims on Thursday. Maybe we will definitely have to keep an eye on that. But if that's not the thing that does it, Powell speaking on Friday at 7 should be out of our trades by then anyway. So it should be a pretty free trading week. And if people are starting to feel bearish, which they are because they're thinking this head and shoulders has changed, then it's likely that market maker is going to come for the upper liquidity. Because if we have a look at high block, look how much liquidity they've got above price. Now I've already marked these levels on the chart and explained them to you, so I won't go through it again. But we've got more people bearish than they are bullish by about 2 times. We've got a delta at 7 billion that has reduced. Look, there's liquidity below as well, but not in comparison to what's above. So yeah, I am kind of hoping that we continue up to this 28K. That's what I'm personally watching for. But my stop is already in profit, and if the market shows me a reason to get out and bag flip to a short, then that's what I'll be doing at the right time. Right now, I don't feel that that's the right time. So I'm going to stick with you this week. I'm going to hopefully do a live one tomorrow. I had to do a recording today. Apologies for that. But hopefully this ties you through until then. And if you are looking to trade any of this stuff, know that OKX is my preferred exchange. We do have an exclusive offer going on. There is only 4 days left on this. So be sure, if you are looking for a new exchange to trade on, or you want to give OKX a try, it is so easy to use. We have tutorials and everything like that in our Discord on how to use it as well, if you need. Also on this channel as well, that you can search for. But check out the link in the description of this video. Join up here to unlock up to $30,000 in rewards. And in addition to that, you also get a 15% fee rebate on all of your trades ongoing. So that definitely adds up over time. So be sure to check that out. Check out the website if you're wanting to learn this method in full detail. Otherwise, just stick with me here on YouTube and I will continue to teach this method over time. But yeah, smash up the like button if you enjoyed this video, or if you learned something new. Leave me a comment down below. Let me know, did you catch the long? Did you see where the trap was and take advantage of it? And how are you feeling? Are you feeling bullish from this point forward, or do you think this little move to the upside is going to end shortly? Have an amazing day. I'll see you guys tomorrow.